the latest news that's filtering through is that a Brazilian company called America Latina Logistica will be helping you guys with a 5-year rehabilitation and investment program. Can you just confirm that for us and give us an indication of what the focal areas will be?
Yes, I can confirm that. They are our technical services partners, and what we have done, we've signed an agreement with them for 5 years. They will be providing a number of people who will be joining our management team on the C levels, that is the direct reports to the managing director. They will also be providing us with a number of other people, up to about 7 people. So in total, we should be will be about 9 to 10 people that we'll get from AL, as they call them, and they'll be joining our management team. In addition to that, we do hope that we can tap from their state-of-the-art technologies that they have applied to be successful in running the Argentinian line.
All right, now they're renowned.
The Brazilian line, sorry.
They're renowned to be turnaround strategy experts in Latin America, and they've identified 3 key areas for you to focus on: refurbishing the rails, maintenance of the locomotives, and then introducing ICT innovations within the way in which you run the railways. Can you just tell us how you're going to approach some of these issues?
Right. As you know, the railway system we are running, our concession includes the Kenya Railways network and the Ugandan railway network. This network has suffered from lack of investment maybe for 20, 30 years in terms of upgrades, in terms of rehabilitation. So we've inherited a huge deficit of deferred maintenance, as it were. So the key areas they're coming to help us, which are the experiences that they have applied in the turnaround of the Brazilian rail system, is first of all to address the track. The way we are addressing is to deal with the curves around Nairobi to Mombasa, and then there's the other rehabilitation of the line, the permanent way, which just involves redoing the re-slippering and getting the ballast and parking ballast so that the line is steady. At the moment, the permanent way is fairly weak. That will be the first one, and we have already signed, with the help of our lenders and our shareholders, a contract for which will cost about $10 million to put in new rails. The second item that they are going to be helping us is the rehabilitation of the locomotives. All our locomotives expired a mandatory 8-year rehabilitation and overhaul that they were supposed to take. So in their experience, they are very good at overhauling locomotives and bringing them back into life. That will give us another 10 to 20 years on the locomotives we have. And then thirdly is refurbishment and rehabilitation of the wagons. And key to this, we are looking at container flat wagons so that we can be able to service as a reasonable and a decent market share for the containers that are coming from the port of Mombasa. All
right, now talk to us about the partnership that you have with various stakeholders, because we know that there's been a restructuring of the shareholding of the consortium that is going to be managing the Kenyan railways. We know that it's a 21-year concession with the Kenyan government, and they have quite a bit of say. For instance, we were told that 6 passenger coaches have been refurbished, but you can't use them because you're waiting for a go-ahead from the government. So exactly how does this partnership work, and how stable is the consortium, because there have been some issues in the past?
Let me start off with the question of how stable the consortium is. The concession is for 25 years. We have, to be very candid, squandered about 4 years. And it's 4 years because the concession was nearly a failed concession. For the first 2 years, it did not go very well. Right from the word go, there was squabbling among the shareholders, and this went to arbitration in London. After 2 years, I think the part of the shareholders who had come in, that's Transcentury and Centum and Babcock Brown, and also the other part of of the consortium, the bidding consortium, had come back on board, that's Prime Fields and Mirambo, then we started now looking at how we could take the concession forward so that it doesn't fail. We started negotiations, and I came in only 2 years ago. We started negotiations with the government to look at the concession obligations, what had failed and what had worked, and how going forward we could extend some of the milestones that we should have attained at a certain period. Those negotiations took about a year, and then we went into negotiations sorting out the shareholding structure and the shareholding restructuring. That took us also a period. By August this year, I'm pleased to say that all the anchor shareholders now, we have 3, Citadel Capital, and then we have Trans-Century, and a Ugandan BOMI.
Right.
So I'm very confident that the shareholding structure now is stable, because they are aligned in their purpose. They have been completely engaged in crafting the business plan, the 5-year business plan, which we have done also with AAL, who have been engaged with us for a period of about 1 year. We have also engaged all our lenders in it. So going forward, these shareholders, I think, because one of the things that the concession nearly failed was the corporate governance around the whole concession.
All right, Mr. Ondego.
So now that we are stable.
Mr. Ondego,
Yes.
let's just move this conversation forward. I mean, now that we've got a stable consortium, they have pledged to revitalize the railways with an injection and investment of about $250 million US. But we're told that,
That's correct.
given some problems that exist within the railway system in Kenya, the inefficiencies within the system, it's now rail accounts for less than 10% of East Africa's transportation. You need to start reducing costs by about 35% in order to see rates of return on the capital investment. So just going forward, how are you just going to manage the economics of the project?
Yes, you are right. So we have a business plan, 5 years. It's 250 million US. It's fully funded, as it were. We are now going through a resettlement action plan before we can tap into this money, because we need to deal with the people living on the rail reserve land, which most of it is the operational safety zones. But once we deal with Mombasa to Nairobi, the rails arrive 8 months, 12 to 15 months. We should have the main trunk line, which is Mombasa to Nairobi, doing at least 20 to 30% market share of the volumes that are coming into the port of Mombasa. You also asked me a question about the passenger train. We run commuter service around Nairobi. The one that we are waiting for the authorization is what we want to do as part of our community service obligation in Kampala, because we do not run in Kampala, but in Nairobi we do that, and also Mombasa we run certain trains, 3 trains a week.